Cipher Mining stock ended the week with a fascinating session on Friday, a day that really told two stories in one. The stock opened weak, initially falling sharply after headlines surfaced about insider selling earlier in the week. But as the day wore on, sentiment began to turn. Buyers stepped back in, momentum built gradually through the afternoon, and CIFR managed to finish in the green, up 4 cents, or about 0.21%, to close at $18.76 per share. That might not sound like much, but it represented a strong intraday recovery from the morning lows, and the resilience carried into the aftermarket where the stock gained further. For investors following Cipher's incredible multi-week run, this was an encouraging sign, not just that the rally still has legs, but that conviction remains strong even in the face of short-term headwinds. The day began with a gap down. Cipher opened significantly lower after a Form 4 filing revealed that Co-President and Chief Operating Officer Patrick Kelly had sold a notable portion of his holdings earlier in the week. Insider transactions are public record, and when large or senior-level executives sell, it tends to make headlines quickly. In this case, the initial reaction was predictable. Traders saw the insider sale and jumped to conclusions. Some assumed it might signal overvaluation after the stock's huge recent run, others thought it might indicate a shift in sentiment among management. That reaction triggered a wave of selling early in the session, sending the stock lower right from the opening bell. But context matters here. Insider sales don't automatically mean trouble. Executives often sell for a variety of reasons: diversification, tax planning, or scheduled stock programs, and these transactions can coincide with strong corporate performance. In fact, when you zoom out, insiders at Cipher have periodically taken profits during run-ups, and the company's overall trajectory hasn't been affected in any material way. And that's exactly what the market seemed to recognize as the day went on. After the morning weakness, something interesting happened. The sell pressure began to fade, and buyers stepped back in. The reversal started around midday and gained traction through the afternoon. What drove it? Most likely, the same forces that have been supporting Cipher's broader uptrend over the past month. Investors remain incredibly bullish on the company's strategic pivot into AI hosting and high-performance computing infrastructure. Ever since Cipher announced its 10-year partnership with Google-backed Fluidstack in late September, sentiment has fundamentally changed. That deal positions Cipher not just as a Bitcoin miner, but as a dual-platform infrastructure company, one that can generate revenue both from crypto mining and from AI data hosting. The partnership includes a $3 billion AI hosting agreement and a Google-backed lease guarantee valued at around $1.4 billion, plus warrants giving Google the right to take a 5% equity stake in the company. That's a huge endorsement, and it's still fresh in the minds of investors. So when the stock dipped today, many traders likely saw it as an opportunity rather than a red flag. The combination of strong fundamentals, institutional backing, and growing excitement around the AI expansion story made today's pullback feel more like a shakeout than the beginning of a broader decline. By the close of regular trade, Cipher was back in positive territory. But what really stood out was what happened next. The stock continued to climb in after-hours trading. That aftermarket strength can be interpreted in a few ways. First, it suggests that the broader investment community remains confident in the long-term story. If there were serious concerns about the insider sale or the fundamentals, we likely would have seen continued weakness after the bell. Instead, we saw renewed demand. Second, it could reflect the growing influence of institutional accumulation. Institutional investors often use extended hours to build or adjust positions quietly, and Cipher has seen a notable uptick in institutional interest over the past month. The company's market cap, trading liquidity, and growth trajectory are now drawing the kind of attention that large funds and algorithmic desks follow closely. Finally, it reinforces the idea that today's volatility was mostly technical and sentiment-driven, not based on any change to Cipher's operations or outlook. Let's step back and look at where Cipher stands fundamentally. Operationally, the company continues to deliver. In its September update, Cipher reported mining 251 Bitcoin for the month, selling 158 while holding about 1,500 in reserve. Its self-mining hash rate sits at 23.6 exahash per second, powered by more than 114,000 deployed miners. That's a significant scale advantage. Just as importantly, Cipher's energy efficiency remains among the best in the industry, with an average fleet efficiency of just 16.8 joules per terahash. That matters because lower energy consumption means higher profit margins, especially in a volatile Bitcoin environment. And beyond mining, Cipher is executing aggressively on its data center expansion. The Black Pearl facility is now fully operational for Phase 1, and the Barber Lake expansion is on schedule. These aren't just mining farms, they're designed to support AI and HPC hosting workloads. In other words, Cipher is building physical infrastructure that can flex between Bitcoin and AI hosting based on market demand. That operational flexibility is one of Cipher's greatest strengths. It gives the company a hedge against the cyclical nature of crypto and opens up a whole new revenue stream tied to AI growth. What makes Cipher so compelling right now is how quickly its identity is changing. Just a year ago, most investors saw CIFR as a niche Bitcoin miner. But today, it's being talked about as a key player in the infrastructure layer of artificial intelligence, something akin to a digital landlord providing the computing power that modern AI systems depend on. That's a massive re-rating of what the company represents. And it's a narrative that institutions understand very well. It's also why the stock has seen such strong upward momentum since the Google deal was announced. Yes, valuations have risen quickly, but that's the nature of early-phase growth stories. When a company transitions into a new vertical with exponential potential, the market prices in that optionality ahead of earnings. The fact that Cipher's market cap has expanded so sharply is a reflection of belief in that future trajectory, not just hype. So while today's headlines about insider selling might have triggered short-term jitters, the broader story remains solid. The fundamentals haven't changed. The partnership with Google-backed Fluidstack is intact. The expansion continues. And institutional sentiment is still leaning bullish. From a technical perspective, Cipher is still in a strong uptrend. Even after recent volatility, the stock remains well above its key moving averages. The $18 level now looks like a potential support zone, a region that once acted as resistance during earlier breakouts. If the stock can consolidate around this zone and maintain buying pressure, it could easily set up for another run toward the $20 level in the near term. That would represent a continuation of the broader upward channel that's been in place since late September. The key thing to watch next week will be volume. If the heavy selling volume we saw earlier this week starts to taper off, and accumulation volume picks back up, that would be a clear sign that the pullback phase is over. So where do we go from here? Heading into next week, there are a few key things to keep an eye on. First, monitor for any new insider filings. If additional sales appear, the market will likely pay attention, but if we go quiet on that front, it could allow sentiment to stabilize. Second, keep watching for updates on Cipher's AI hosting rollout. The market will want to see progress, whether that's new client onboarding, capacity milestones, or further infrastructure announcements. Third, Bitcoin's price action will continue to play a supporting role. Cipher's mining operations are directly linked to BTC performance, so any major swings in crypto will naturally feed into stock sentiment. And finally, the macro environment. If the broader market regains footing after a volatile few sessions and risk appetite improves, we could see renewed rotation back into high-growth and AI-related names, Cipher included. All in all, today's session told a powerful story, one of resilience and confidence. Despite negative headlines and a shaky start, Cipher recovered into the green and gained strength in the aftermarket. That's not the behavior of a company losing momentum, that's the behavior of one consolidating before its next move. The fundamentals remain robust. The AI expansion narrative is alive and well. Institutional interest continues to grow. And while insider selling made for some noise this week, the underlying conviction in this story remains. For long-term investors, this kind of volatility can actually be a gift. It shakes out the weak hands, resets the technicals, and often creates opportunities to accumulate ahead of the next breakout. Cipher Mining is still one of the most compelling growth stories at the intersection of crypto and AI infrastructure. The week may have started turbulent, but it ended with composure, and that's a signal worth noting. As the company continues to expand and execute, the balance between risk and reward looks increasingly favorable. And if next week brings confirmation of this renewed momentum, CIFR could very well be gearing up for its next leg higher.